Welcome back to another look at the charts report. Today we will be looking into EURUSD, GBPUSD, WTI and AUDUSD. Starting first with EURUSD for our chart. Now in the latest days, EURUSD has fallen to levels previously seen in November 2020. Our S1 118 support level was engaged but was not breached. Yet, as the bears have dominated the scene in the past days, we could make a case for the continuation of this trend. Lower the S1, we have noted the S2 117.60 line and the S3 117.20 support level. In the scenario of a bullish return for the currency pair, then the R1 118.35 may be tested first. Higher, we have also made room for the R2 118.75 to become a target, as this was a solid support line throughout March. Finally, our R3 119.30 hurdle could also come into play if the market is willing to revisit levels over the 119 round level. The RSI indicator below our chart is currently running across the 30 line, giving more weight to the bears. Fundamentally, some analysts believe the Eurozone's delay over the vaccine rollout, the rise in new virus cases and the tightening of restrictions is adding to the sell-off of the euro. Moving now to GBPUSD. For our chart, GBPUSD continues to trade in a selling momentum that was extended in the latest sessions, sending the currency pair to the S1 136.60 support level. The S1 level that was last seen in early February held its ground and the price action has bounced off for the time being. In case the level is breached, in our opinion, the S2 135.70 could be next and the S3 134.50 could be found even lower. In the opposite direction, and if the bulls take control, we could see a resurgence towards the R1 137.60 resistance barrier, which was part of the price action very recently. Higher, we have also noted the R2 138.60 level, which has proven to be solid in March. At the top, we have set the R3 140 round number level, acting as a long-term target for the bulls. However, according to the RSI indicator below our chart, which has just submerged above the 30 level, confirming an oversold market is still present. On the fundamentals, leaving aside the vaccine war with the EU, which may have fizzled out, the UK has seen UK credit and debit card payments recover towards pre-COVID levels. Moving now to WTI. For our chart, WTI climbed and surpassed $60 per barrel on Wednesday, as the bullish momentum was unexpected, and if the trend is to extend further upwards, then the R162 level could come into play first. The R1 line was tested various times from the 19th to the 22nd of March, but was not breached. Thus, we consider it a very relevant level as traders may have familiarized with it. Higher, we have also noted the R2 63.50 barrier and even higher the R3 65 resistance line, which may also be in focus for the buyers. In the opposite direction, our first support is at the round number S1 60 level, which we believe is a magnet of price action at this moment. Lower, we have set a line at the S2 58.80 line that was only breached once in March, and that was on the 23rd. Finally, even lower, the S3 57.50 barrier is looming and is the lowest level reached for WTI since mid-February. Despite the recent upward run for WTI, the RSI indicator below our chart remains nearby the 50 level, which implies that the move higher does not cover for the drop performed in the previous days. Fundamentally, a problem in the Suez Canal seems to be delaying many vessels carrying a number of goods, including oil. The significance of the problem is yet to be confirmed, but delaying oil orders is almost always a bullish indication for traders. Moving now to our final chart. This is AUDUSD. For our chart, AUDUSD dropped to a monthly low in the recent sessions, but stabilized nearby our S1 0.7580 support level. If the level manages to weather the storm, then the bulls could jump in and drive prices higher towards the R1 0.7665 resistance level. Higher, we have a level that was tested constantly in the previous days but was not breached, which is the R2 0.7750 line. At the top, we have set the highest price level reached in March, which is the R3 0.7810 hurdle. On the contrary, if the price action continues to move downwards, then the S2 0.7520 level could come into play. Lower, the S3 0.7455 hurdle is also a possibility if the bears are willing to extend their streak. Please note, the S2 and the S3 levels were both last seen in December 2020, but remain very possible targets for traders in our opinion. On the fundamentals, commodity currencies like the AUD may be of interest at the moment, as commodity prices may have been supported by the positive PMI manufacturing numbers being on the rise around the world. And that's the end of this report, traders. We hope you enjoyed it as well as found it useful. If you like this video, please feel free to share and subscribe. Until the very next time, enjoy solid trading.